The next 4 years, this is the early period of corporate adoption, institutional adoption. This is the period where BlackRock can go from nothing to having 100 billion or hundreds of billions of dollars of Bitcoin, right? So there's a struggle of who will securitize the ETF. And then this is the period when we'll see, some major banks, banks in South America, a bank at Itaú, or banks in Europe, or banks in the US that will become Bitcoin custodians. Which one and who will be the leader in that space? Well, we'll know by 2028. We're still waiting to see. And this is the year when you'll start to see large corporations adopting Bitcoin as a treasury asset. We'll have fair value accounting, and it'll become much more normal. And you'll start to see a universe of 20, 30, 40, 50, 100 companies that have some Bitcoin exposure. And I think once you get to 2028, from 2028 on to maybe 2040, that last 12 years, that'll be just breakneck growth. I mean, we'll see everything kind of working. We'll see 90%, 95% clarity as to how it's going to work. That'll be the growth years. And I think when you get to 2040, Bitcoin will be 30 years old. And we'll have moved. The first 15 years were kind of adolescent childhood. The 15 years after that, the teenage, young adult years. And then it'll be like the first 30 years of the internet, right? And from there, it'll be a growth industry, but it'll be kind of a mature, well-understood growth industry. And every corporation will expect to work with it. Everybody will understand it. It won't be this crazy, exotic, complicated thing anymore.
In a recent interview, Michael Saylor, the founder and executive chairman of MicroStrategy, shares his latest bold prediction regarding the ongoing growth of Bitcoin and its high potential for global adoption. According to Saylor, Bitcoin has been growing in an upward trajectory from a long-term perspective. This upward trajectory, in turn, will lead to widespread acceptance and propel its price to even higher levels in the coming years. Saylor believes that Bitcoin will keep outshining other cryptocurrencies as it is the one true decentralized asset worthy of widespread adoption. With that, he predicts that the pending Ethereum ETF will not be approved, implying that Ethereum, along with other tokens like BNB, Solana, Ripple, and Cardano, will never be accepted by Wall Street or mainstream institutional investors. We will now bring you clips of Michael Saylor as he shares his latest insights.
How many times have you eaten junk this week? You're just wasting your money. Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. Skip your next junk meal and instead invest in your education. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So I think what you're going to see over the coming 4 years is progressive adoption of Bitcoin by a bunch of banks, a bunch of various regulated entities operating in every major jurisdiction. I don't think that in 4 years every question will be answered, but I do think 4 years from now you'll have a lot more clarity than you have right now. And that clarity, to a certain degree, will come because of the entrance of the large entities in the space. For example, the success of the Fidelity and the BlackRock ETFs will accelerate clarity with regard to can NASDAQ and or other stock exchanges trade options? Under what when can they trade options? There's already interesting movement afoot for the New York Stock Exchange to start trading 24/7, and that's been created by the crypto enthusiasm. So I think you're going to see an evolution of traditional finance organizations. I think you're going to see a lot of lobbying for more precise legal clarity and regulatory clarity. And you're going to see a lot of building, both by new digital assets companies, as well as you're going to see all the traditional accounting and traditional finance operators. They're going to upgrade their systems in order to support this new Bitcoin-backed economy. And it's going to take a lot of money, and a lot of accountants, a lot of lawyers, and a lot of thinking and some time, but because of that action, I think we'll get to a much better place. I think that January of 2024 was the beginning of the period of corporate adoption of Bitcoin. And, that first big catalyst was the SEC's approval of spot ETFs for Bitcoin. The second big catalyst is going to be the SEC's denial of every other crypto application for a spot ETF. And the entire world was thinking, will the regulators ban Bitcoin? And we answered the question, no, it won't be banned. And then the next objection is, but will it be copied? And when we actually see the regulators deny the applications of the copies of other crypto assets, then we will have checked the box. It won't be banned. It won't be copied. If you're deciding whether to build a 100-story skyscraper and invest hundreds of millions of dollars on it, and someone says, well, you either need to use steel or you need to use bronze, and you say, well, which one is the right one? And the answer is unclear. Well, it might be that the bronze is the right one and steel collapses, or it might be steel is the right one and bronze collapses. That paralyzes a big corporate project. But when you get past that and you realize, well, there's just steel, and there is no second best metal for structural civil engineering, once you get to that point, the project moves forward because it's pretty obvious to the corporation they want the 100-story building. They just don't want to be paralyzed by the indecision and the fear of making the wrong choice. So I think that the critical catalyst will be not just the institutional or the regulatory acceptance of Bitcoin as an institutional asset, but it'll also be the regulatory rejection of the alternatives.
Needless to say, Saylor's remarks didn't go down well with everyone. Charles Hoskinson, co-founder of Cardano, criticized Michael Saylor's stance on Bitcoin, suggesting it's short-sighted to dismiss alternative cryptocurrencies. The Cardano co-founder took to X, formerly Twitter, and addressed the issue in a video where he says, Michael, if your only argument for Bitcoin is that governments are appraising it and liking it and that all the altcoins are hated by governments, you are on the wrong side of history, my friend. Do you agree with Hoskinson, or do you stand with Saylor? Tell us in the comments. Now let's return to Michael Saylor as he shares more of his latest Bitcoin insights.
So if you're a company and you want to be able to move money at the speed of light, or if you want to implement the next generation of internet applications by using the Internet of Money, then you're going to be interested in this. It's like we're in the first year of corporate adoption of the Internet of Money. And just like in 1994, that was the first year of adoption of the internet. You would want to do it if you want to stay on the leading edge of digital transformation. The second reason the company want to do it is because the entire world is attempting to beat the cost of capital, and the cost of capital is about 12%. And the capital asset that most of them use is bonds. And bonds very rarely yield more than 3%. So all of their treasury portfolios are invested in something which is generating a minus 9%, a negative real yield. And Bitcoin generates a positive real yield. In the last 4 years, it's been 40 to 50%. So it's 4 times the cost of capital. But 2 times the cost of capital would be magical. And even equal to the cost of capital, if you could simply invest your capital at 12% and meet 12%, then your capital wouldn't be dilutive to your shareholders. So Bitcoin represents an opportunity on the P&L for technology leadership, and it represents an opportunity on the balance sheet to attract capital, preserve capital, and create shareholder value. I think most corporations have their hands full competing on the product side. So most companies have either a very competitive product market or a very competitive service market. So their first mission is, how do I have the world's greatest product or service? Their second mission oftentimes is, how do I do it efficiently? And so in the background, they're always swapping out technologies. And when the web comes along, or when the Internet of Money comes along, they'll look and they'll say, well, right now it's 2% fee, and can I get that to be a 0.1% fee? So they will discover new technologies as a way to save money, or they'll, if we take, say, Cash App, for example, it supports Bitcoin, and that's a new technology that generated $10 billion a year of top line sales. So they use it to differentiate their product. So if they find a way to differentiate or to save money, they'll be very enthusiastic. Then you have, on the balance sheet side, you have a set of financial actions that they take in reaction to interest rates. If interest rates are gyrating to zero, they're changing their balance sheets. When interest rates are going to the moon, they're moving the other direction. And they're, of course, reacting to shareholder pressure. And if the shareholders are saying, give us the money back with a buyback or a dividend, and they're reacting to that. But throughout all of that, right, there is this spreading orange wave. And the orange wave is, of course, Bitcoin, and it is spreading into the capital markets through a dozen publicly traded Bitcoin miners. It's entered through companies like MicroStrategy and Tesla and Block and Coinbase that all have a Bitcoin interest. It's spreading through nearly a dozen US-based ETFs. But now we have Hong Kong-based ETFs, and we have soon Australian ETFs, and we have some European ETFs. Well, as each of those things spread, they slurp up capital. As their performance outstrips gold or the S&P or bonds, they get headlines, and that causes them to creep onto the front page of CNBC and Bloomberg and Fox Business. And that starts to plant some questions in the minds of financial advisors and institutional investors, and they in turn start to talk to other CFOs. And so I think that the orange tide is spreading. I think that corporations, especially publicly traded corporations, will tend to be on the conservative side. You'll probably see institutional investors move before the corporations. You'll see sovereign wealth funds move before the sovereign. You'll see the private companies move before the public companies. But, no, there's no way to stop an idea whose time has come. And the success of the idea will tend to slurp up the capital in the marketplace, because we call them capital markets for a reason. The capital is going to go to where it can find the highest return and where it gets treated the best. And as that capital reallocates, then industry watchers take note, and then the Overton window shifts.
What are your thoughts on Saylor's predictions and perspectives? Share your thoughts in the comments section below. If you found value in this video and would like to stay updated with all the latest news in crypto, consider subscribing to the channel as we post content on the most relevant crypto news daily. Click that notification bell so you won't miss out on any important update. We hope you enjoyed today's video. Give us a like if you did. Thank you, and we'll see you next time. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.